AMD isn't trying to beat NVIDIA at its own game. It's the only company diversified enough not need to. Let's find out why. My name is Ivan and welcome to Magnet Trade. Today we are breaking AMD down into 5 key areas: the sector, their financials, their competitive moat, the leadership team, and finally the technicals and margin of safety. Let's get into it. AMD was founded in 1969 and is in the technology and semiconductor sector. This sector is driven by the AI race, but unlike NVIDIA, AMD isn't dialed in on AI infrastructure alone. It produces a lot of other products as well. So let's quickly cover every type of chip they make. Beginning with AI accelerators. Everyone knows that the AI boom shifted the main focus of the whole sector specifically to this segment. Hyperscalers like Microsoft, Alphabet, and Amazon are dedicating hundreds of billions of dollars to expanding AI infrastructure. And even a year ago, the market focused on chips built for training, but now everyone is more interested in inference instead. Here, higher memory capacity, energy efficiency, and tight synchronization through the CPU are required. Overall, in this segment, the direct leader is NVIDIA, but AMD is the #1 challenger. They are the main open commercial alternative, but lack the maturity of the software stack. They are ROCm compared to the famous CUDA. The next segment is server CPUs. The main rival here is Intel, but AMD is the technological leader. They control around 30 to 35% of the whole CPU market, and even more in revenue from CPUs. Earlier, AMD broke Intel's monopoly with chiplet based architecture and power efficiency. Next is FPGA and adaptive SoC. The main rivals here are Intel and Lattice, but AMD remains the leader. After buying Xilinx, the company, together with Altera, made by Intel, formed a duopoly in the aerospace industry, defense, telecommunications, specifically 5G and 6G, and the automotive industry. Continuing with customer CPUs, the main rivals here are Intel, Apple, and Qualcomm, who produce Snapdragon. AMD holds over 30 to 35% of the x86 market for desktop computers, and is gradually catching up with Intel in the laptop market, but is facing renewed pressure from ARM processors. Next is gaming GPUs. The leader here is NVIDIA, and AMD plays a weak challenger. NVIDIA dominates with the market share of over 80%. AMD has lost ground in the ultra-high-end segment due to NVIDIA's strong position in ray tracing and upscaling, that is DLSS. And the last one is semi-custom products for consoles. The main rival here is NVIDIA, which supplies chips for the Nintendo Switch. AMD supplies the SoC for PS5 and Xbox Series XS, making it the main leader in home consoles. As we see, AMD doesn't manufacture memory chips, DRAM and NAND, analog chips or radio frequency modules. It specializes exclusively in high-performance computing, and it's the only company in the world that produces x86 CPUs, GPUs, FPGAs and DPUs, unlike NVIDIA and Intel, which is strong only in one or at most two of those areas. Looking at the macro picture, interest rates are stable at 3.5 to 3.75. For AMD, even future growth in rates doesn't sound like a big deal, because they carry quite a low level of debt. And economic cycle indicators point to future growth and not to the end of the cycle just yet. Gross profit is around 50% of total revenue. Nice. CGA is in the mid-range and equals 67%. R&D is quite high, but for semiconductors that's okay. Depreciation and amortization are quite low. Nice. Interest expenses are effectively zero. Net income is 50.5% of total revenue, and this margin is considered the most interesting, because both companies with great potential and those with great problems sit in this range. The values aren't really stable, but that's due to the supply and demand driven nature of the sector. Looking at the balance sheet, cash, inventory and receivables are nice and show a healthy positive trend. Property, plant and equipment are low because AMD has no factories of its own. Also, the company has started long-term investing, which is nice. There is no preferred stock and retained earnings are growing. Last quarter's dip was just an accounting exception, rather than a real loss. Let's take a look at some ratios. Return on assets equals 7.6% and return on equity equals 9.6%. These numbers are kind of weak, but liabilities to shareholders' equity equals 25%, and that number is nice. Looking at the cash flow statement, I want to point out extremely low capital expenditures compared to the sector. Buybacks were ongoing in previous years, but this year there was a small issuance of stock. Free cash flow doesn't have a stable trend, but that's due to the cyclical nature of the business. AMD doesn't have a wide, unchallenged moat like NVIDIA or ASML. Rather, they have a narrow moat built on deep technological barriers, while being attacked by competitors at the same time. Let's take a look at each component separately. They have quite a wide moat in terms of intangibles. First, x86 architecture is secured by a difficult system of cross-licensing with Intel. A new player can't enter the market without a license, which makes AMD and Intel duopolists in the market for classical computers and data centers. Secondly, AMD was the first to break a large chip into small functional blocks, that is, chiplets. This gives a high yield rate of suitable chips and a lower cost of production. Lastly, Xilinx patents and technologies in reprogrammable logic present a huge barrier to enter into the aerospace, defense and industrial sectors. Switching costs sit somewhere in the middle of the moat. For enterprise and cloud servers, they are extremely high, because once a data center optimizes software and server-X for AMD, returning to Intel costs a lot due to a fall in power efficiency. In the automotive or telecom industries, they're high as well. Chip upgrade cycles last 7 to 10 years, and if a system is designed using an FPGA from Xilinx, it's virtually impossible to replace it until the next generation of equipment is available. But for a PC user, switching costs are effectively zero, and they can easily swap between Ryzen, Intel and Apple Silicon. Among the weaknesses are network effects, and this is the weakest spot for AMD. NVIDIA created a strong network effect around CUDA. Developers and data scientists write code for it year after year. AMD promotes open source ROCm, but catching up to CUDA is virtually impossible for now. Let's start with AMD's CEO, Lisa Su. She's a strategy architect and pragmatist. She holds a doctoral degree in electrical engineering from MIT and worked on silicon technologies at IBM and Freescale Semiconductors. She is not just a manager, she deeply understands the science of semiconductors. Lisa has a style of quiet confidence. She eliminated internal chaos, banned empty promise marketing, and instituted a 5-year horizon rule, meaning AMD focuses only on products that could bring them leadership in 3 to 5 years. Her credo is make good products and deliver on time. Mark Papermaster is CTO with 26 years of experience at IBM, followed by a role as Vice President of Hardware Engineering at Apple, where he worked directly with Steve Jobs on the iPhone. Mark is the company's chief engineering diplomat. He was the one to shift AMD's core focus to chiplets. His mission is to ensure the CPU, GPU, and the AI software teams share a unified code and hardware foundation. Forrest Norrod is Executive Vice President and General Manager of the Data Center Solutions Business Group at AMD. He's an experienced executive who previously led the same department at Dow. Forrest is a client-oriented pragmatist. He speaks the hyperscaler language, and his success with EPYC processors was built on personally persuading cloud giants to shift to AMD by guaranteeing lower power consumption per server and strict delivery timelines. Jin Hu is the CFO holding a PhD in economics and previously led Marvell Technology through a period of explosive growth and capital optimization, while Su and Norrod lead the technological offensive. Hu defends free cash flow and gross margins. She directs R&D capital into high-margin segments, while managing operating expenses in cyclical areas like gaming and client PCs. Overall, AMD operates on deep cross-functional integration. Engineers across divisions don't build isolated products. Instead, products are developed as shared building blocks. Also, with fewer resources than NVIDIA, AMD is more prone to partnerships, both internally and externally. For technical analysis, I use Bollinger Bands, MACD, supporting resistance levels, and moving averages. But because AMD reached new highs and is being driven by the AI supercycle, there is no point in using most of them. And the only meaningful tools for us are support and resistance levels and volume. We see a gap from $360 to $400. And this level is the nearest attractive spot for potential entry. Though even that is still too much in my view. The next one is basically around 220, but I doubt we'll reach it until after the AI race cools off. Looking at price to free cash flow, it's 94, higher than the 5-year average of 80, and price to earnings is 121, which is extremely high. Overall, there is plenty of room for the price to decline before you could catch a nice entry point. In a nutshell, AMD is a great company with a ridiculous price. Even though compared to NVIDIA, which we have an analysis of on our channel, it's really small. It has a moat and leads in some segments of the sector. They have skilled management as well. Yes, there are some problems on the balance sheet, but that's not a huge red flag. The real issue is the price, and that's what matters. If you buy anything while paying 10 times its real value, you will lose money. At the end of the day, I like the company, but I'll definitely wait for better prices. If you enjoyed this analysis, like and subscribe. We have a lot more companies to check. Share your thoughts on AMD in the comments below, and I'll see you in the next one. Peace.